Hello, YouTube. The S&P now has multiple gaps on its daily chart. So we want to ask ourselves whether or not there is going to be a gap and trap pattern that we're seeing here or a lockout rally. Kudos to Mason for mentioning it. Or if this is just going to be more of the same. So the question is whether or not Jerome, when he makes the decision, the big man, it looks like the market did most of the work for him now. It's now at 94.2% after that inflation report we got today. So what it means for me is that as of right now, we're noticing some leaders lead. Those include NVIDIA and Apple that so far are up 176% year to date and also 40%. So now that the broader market is leaving these gaps on the chart, let's have a look over at NVIDIA because it notched a record today. It's a record weekly close, record intraday high, or meaning its all-time high is at 419. But right now, we've closed for the first time over 415, which also means that NVIDIA is now worth $1 trillion. That's right. It's worth $1.01 trillion, or roughly 405 is the number that claims that $1 trillion level. And the reason why I want to talk about these gaps is because when we note that we're going into the period where we're grinding higher, we do actually leave a gap here as well. We get our first meaningful gap on earnings. We flag out, we pop flag. There are some gaps that are formed inside of this sideways pattern, but they all get filled. And when we look here to NVIDIA, ever since it had its last earnings report, just like last time, again, look at the earnings, it was the catalyst. Look at the earnings, it was the catalyst. We even have a little gap over here. The saying is that all gaps get filled, but the other part is that they have to get filled in time. So now with NVIDIA putting in yet another gap inside of its larger gap, it's leading. It's at a record close. Is there volume to support it? Well, not really, not right now, but all the selling happened at all-time highs. So if we notice that NVIDIA has now joined the club, what about Apple? Because Apple is the king. When we look here to Apple, it actually did the same thing yesterday. So we have a record all-time high for 2023 here at 184. Yesterday's close, though, was at 183. So that's a record closing basis for Apple. And then today, second strongest close ever, which means Apple led, NVIDIA followed. Now the question is, who else is going to go to fresh 52-week highs and whether or not they are going to drag up the rest of the market? Because right now we still see healthcare is mixed year to date, consumer non-durables red, energy red, financials more mixed. But if we look here to a roughly 3-month or last 90 days, hey, this kind of looks like a bull market where there's a lot more participation. We notice that most blocks are going to be green, which means in the last quarter, everything looks a lot healthier as of right now. So with Apple and NVIDIA both leading, but then those gaps also being left on the indices or the indexes, what does that mean? Well, QQQ looks very similar where we have this gap here going back to May. That gap got filled. This gap, I think it got filled today too. So QQQ actually only has its gap going back to late May. And then we also have the gaps on S&P, which we just talked about. So as long as we remain over the gaps, we can be into that lockout period rally. And we can also look here to Jerome, where earlier today, it was like a 75% chance that we're going to hike, something like that, 75, 80. Well, now it's 94. So if Jerome pauses tomorrow, the market is priced it in. That's what it means. One thing we want to keep in mind, though, is that looking out to July, now it's at 92. Oh, my goodness, 2% lower. There's a hike baked in for July. It's 60%. I personally do not know what is going to change in the data between now and end of July, which is going to cause the Fed to hike again. Hey, let's listen to Jerome. We note that's going to be coming out tomorrow. So how about we take a quick look at the data that drove the market today? And if you haven't already, I would appreciate a huge favor. If you could please smash a thumbs up and consider subscribing to the channel. I would greatly appreciate that. Thank you ahead of time. So looking here to the different inflation reports, we had CPI on a month over month and year over year, and also core CPI for the month. So what does it mean? Well, these are important data points because there's 3 stars or they are meaningful. High volatility is expected. We now went from 4.9 down to 4.0. And that's meaningful because when we look here to the trend, which tells us what is happening, right? If the website would load, that would be fantastic. It just means that before we were at 5, now we're taking a leg lower down to 4. So come on, give me the graph. Here we go. It just means we're pointing straight down. The Fed doesn't personally care about CPI. Let's see if Jerome talks about it tomorrow. They care about PCE, but hey, this is the reason why the market's up. Let's make sure we're aware of the reason why the gap was left. Looking to tomorrow, we're going to have FOMC at 2 o'clock. Then we got the FOMC statement, interest rate decision, but then the press conference starting 30 minutes later. So we're going to stream this live for a private group. There's a 14-day free trial if you want to join us for that. And then looking forward to this week, we have a few other central banks. We got the ECB on Thursday. We got the BOJ somewhere in here too. BOJ is I don't think I have it on my filter, but I know it's this week. And then we also have an inflation report from Europe coming out on Friday. So there is tons of data for us to digest. And I think what's going to matter most for us in America is going to be what Jerome has to say. We're pushing into extreme greeds, right? This is where we're melting higher now. It's easier for us to go up than not. The performance is looking good. Again, depending on what time frame you're looking at. The last 1 month, it's more mixed. So last 3 months, last 1 month, let's look at the last week. It all looks different. Actually, last week looks a lot better now. So in the last 5 days, going sideways means, hey, this looks decent. We're seeing participation, which is what everyone wants. So why do we have those gaps in the chart? Let's look back to SPY. When were they formed? Is it a coincidence? I'm not sure. We actually have a gap over here too as well, going back to May 4th. So look at the dates on these price targets getting raised. This is from Goldman Sachs, Evercore, RBC, and Bank of America. Raising starting on May 21st, all the way here to June 9th, or Goldman Sachs coming in last, going from 4,000 to 4,500 by the end of the year. That's a big jump. So a lot of these banks have raised their target by hundreds of points on SPY. That's a lot. So it roughly corresponds with where these gaps are left in the chart. June 2nd, oh, okay, well, that's like just before Evercore. June 9th, well, that's like just before this most recent gap here. It is. So it looks like this is just capitulation from the bears, where they're just like, screw it, I give up. I don't want to fight anymore. And they're starting to close out their positions. So that's really what I have to go through into tomorrow. The one thing I want to leave you with as well is for the bears, let's go through what you need to see tomorrow and into the end of the month, because we're nearly half of the way through. And this is the chart that we started the month off with. It was our monthly bullish breakout. So let's try to be objective and look for what is actually happening on the chart, not necessarily what we want to see. We have a downtrend. We broke through it. So it means we've stopped going down, and right now we're going up because we're holding the green line. So what would it take for us to be bearish by the end of June and for that seasonality chart to still be in play? Well, we would need to get back below 422. So we have to get back on a closing basis back below 422.58, or we got to slam down by nearly 4%. So let's just keep that in mind. What does that mean? Well, for us to go back down to 422 from where we are now, it's 3.3%. So let's call it about, I think it's about 3.3, 3.5. So what that means is that even if we get a slam tomorrow, a slam is anything over 1% is a strong sell. Anything over 2% would be a slam. Well, we need a slam, and then we need another slam. We need two slams, either all at once, or we need to start taking that elevator down for us to break that candle high by the end of the month. Otherwise, if we remain above 431.73, that is the other area where we're building up more support. We got 430 as well from the Fibonacci. It means that even if we drop, like say 1%, we drop down 1% to about 432, that's a 1% cushion. And then when we look here to the monthly chart, well, is it upper or lower wicks that are dominating the chart? Well, from what I see one upper wick, which led to a red candle. Otherwise, dip buying 3 times, dip buying another time, 2 more dip buys. So that's what we want to keep in mind. It looks like the market's dip buying, and because we're at the high of the candle, there's not very much profit taking yet, because whoever is ready to sell, there's buyers to push it up to new highs. That's what really matters. Looking here to our weekly chart as well. Let me just have a look here. Here we go, our weekly chart. Because on a weekly perspective, it's also looking like a pretty big pivot. So we pivoted off of our 430, 61% Fibonacci extension. And what this means is that from where we are right now, let's think about what is the risk reward on a weekly basis. Well, if we know that after we claim the 61, if we keep getting higher lows and higher highs, and we're over previous candle highs at 432, we're stair stepping higher. The next target would be 45176, or roughly 450. Perfect area here on the monthly chart as well. That's where our Fibonacci lines up. So tagging that upper line right here that I've now added back in would be our next target. But what does that mean? What is the reward from right here? Meaning, do we understand the law of diminishing returns? So from right now, there's about 3.4% to hit that 450 upside target. And for us to go back below 422, we're looking at about 3.3%. What does that mean? It means that from right here, right now, if you're buying fresh at about 436, 437, there is a 1-for-1 risk reward, a 1-for-1 risk reward. which for me just means that make sure you understand what you're trading. If you don't understand what you're trading, you might not know that if you remain bearish, you're not going to be truly proven wrong until we see what happens at 450 next, or we're all the way back down in that monthly area I just called out. So is it a trap? We're going to find out by Friday. We're going to find out by Friday. And what I've been trying to remind myself since I've been back from holiday is that as we're looking at daily charts and we're noticing these gaps or different patterns, if we zoom out to the higher time frames, whatever we see here on the weekly chart right now will not be proven until the Friday close at 4 o'clock on Friday. So right now, this candle is forming. We want to be aware of what it's telling us, but not get so caught up in the weeds either. Same thing here on the monthly. If you're bearish, like, it's cool to be bearish, but like, are you in the business of making money, or are you now wrong and you're staying wrong? Because we can see what's happening here. We can see what's happening on the monthly chart. If you're bearish, I'm not saying like it's time to like run for the hills or jump ship. You have to be aware of like at what point on the chart you're wrong. Is it when we take out a relative high? Is it when we're at 52-week highs? And on that same token, are you prepared to hold on all the way until the end of June to be proven that we're over this high? Or do you start to de-risk after we at least violate it, which means poking over it? So with that said, I wish you guys all the best of luck into Jerome Powell tomorrow. It kicks off at 2 o'clock and then 2:30. If you want to see my weekend thoughts or how to manage that risk a little bit better, that is now queued up here on the left-hand side. If not, thank you so much for watching. I look forward to seeing you tomorrow.